Hi, welcome to the Market Alert for Friday, the 7th of May 2021. So stocks saved by late day buying panic as dollar dumps and cryptos slumps. The dash for trash appears to be over. So I'm assuming, given the graphic to the left here, it's about seeing the dollar as a safe haven. And of course, with the inflation brewing in the background, or hyperinflation, then definitely not. So the other news, again, inflation. Just as inflation explodes, it's never been easier to get a credit card. As I've mentioned before, as we've come out of the so-called lockups or lockdowns, whatever you want to call them, that you will see a resurgence in the economy, which is just perfectly natural, as you would expect, as there's some sort of normality through the summer. And that's exactly what we're seeing here. And of course, anybody who's been around this stuff long enough knows that this is sort of the last rush. And as far as the asset bubbles are concerned, and spending and house prices and bond prices and everything else. And we know this because we've got this situation here. The explosion of inflation is the underlying issue here. So yeah, we can expect all of this good news. And in fact, even yesterday, Bank of England forecasts growth rate in 70, the fastest growth rate in 70 years as economy rebounds. Well, it's not rocket science, this stuff, is it? You lock people up for 12 months and then, try and get some sort of normality back. Of course it's going to happen. I mean, once all the pubs have opened and the hospitality industry, etc., going forward, at least through the summer, you're going to see this. Like I say, you don't need a degree in economics to work this stuff out. But the difference is, this time, we've got this underlying inflation and also a supply chain problem of goods and services, which I did see an article in Zero Edge and I meant to include, which I forgot to actually include. But semiconductors, that sort of sector, really struggling. And basic things like bicycle parts, anything to do with spares for the motor industry. And also in the US as well, there is a massive increase in the price of second-hand cars as well, I think, which we've looked at in the Market Alert as difficult to get parts for new cars. As I say, it's particularly in the computer and semiconductor sector. So the implied volatility yesterday reacting to this all-time new high in the Dow. I'm surprised that the implied is still so high, actually. We're still above 14, down from 14.36 the day before, given that we'd had a 13.02 a few weeks ago, and it looked like we were going to get a correction during that sideways move, but not. So I'm wondering, given this 14.71, keeping this on the highs here, the market isn't convinced by the move that we're currently seeing. I mean, of course, you can still continue to move prices to the upside without a doubt. And this is the 5-minute chart from yesterday. The market showing that regular pattern of opening, selling off, and then moving back, retracement back to the 200 MA. And then we start moving. We get the sideways move with, again, with a pullback from here to here, and we get a pullback in here to here as well. And then this assault last night, you can see there 100, 200 points just before the close, and having put on again 200 in the first part of the trading session as well. This is what it looks like in the daily chart. We were put a new high in the day before on Wednesday. Thursday we just blew through this once the market had had its initial sell-off. So now we've got a new high once more. It's relentless, isn't it? So 34,557 for the Dow there. I'm just going to have a look at the monthly chart, and you can see what it looks like. It's just vertical. Parabolic is also another expression that's used, and you can see it there. Nowhere near the 5-bar moving average as this market continues to move to the upside down. Incredible. And in the German DAX, a slightly different picture. It's taking a moment or two to actually catch up. Yesterday, moving to the upside, taking out the highs that we had to the left, which I'd mentioned yesterday. And you can see at the moment we're at 89% of this high to this low. We need to add a few more fibs onto this one. So let's go to the high and low here just to see where we are as far as the upside is concerned. We've gone through 38, 50, 62. So we've got 89, and then we've got the 78 from this high to this low. We've also got this resistance across here as well. So the 78 is going to be a bit of a struggle for the market. It'll need to drive through in order to get back through and make any sort of headway towards the all-time highs there. So we'll just save this and make a note of these figures for the upside. Today is the non-farm payrolls, which we'll get to in just a minute. So again, a good reason to move prices to the upside. So while I'm here, I'm going to cover yesterday's action. I didn't record yesterday, so let's just have a quick look through. The market started off with some selling coming in, and then we had a straight reversal up 62 points. That's a 62-point bar. Straight to reversal. The market traded sideways, stayed above the 5-bar moving average, and then you can see there just breaking out, moving up until we got to the R1, which I mentioned yesterday was a 62% retracement in the daily chart. The market stops here and then trades down. Eventually we've got this retracement, and then the market puts in another sell signal, and we make our way back through the high, through the 200 MA, and back down to the previous day's close, where there's a bit of support. And then we get into the afternoon session. It was a bit of a choppy one to start with. The market was down, then it was up, and so was the Dow. And then the Dow broke to the downside, and the DAX followed. But again, just look at how it sits there on this psychological level of 15,100. We get the buy signal. The market moves up to the previous day's close, and there it starts to close back below the 5-bar and then the 20-bar. But later on, it plays catch up with the Dow as it ran up that 200 points, which we saw in the 5-minute there. That's that first 200-point move. The DAX then followed this and moved with it. But overnight for the German DAX, you can see prices opened where they closed and moved to the upside to the previous day's high, which we can see there, and just currently sitting above this. I'm just going to compress this chart, have a look, see where we are, get an idea of some of these figures. 3191 is the R1. Let's just go back to the daily. 3191. So yeah, 78% is that area, give or take a few points. So watch the 78% area, which is the R1 there, just slightly higher, just under the psychological level there. So the upside potential is there for the DAX, and yeah, I mean, we're above the 200 and above the DP, and nowhere near. Yeah, the low is so far away from yesterday's low, which is a couple of 100 points lower from where we're trading at the moment. But like I say, today is news day. I'll just pick this up for you. Today is non-farm. This is out at 1:30. They're expecting to have created just under 1 million jobs from last month's 916,000. So again, we'll wait and see. Lagarde speaking at 11 a.m. this morning, and Broadbent's also speaking this morning, and then it's just the US employment data there. Okay, quick look at the metals before concluding, and again, a surprise for me. I know I seem shocked after all of these years of trading and accumulating precious metals. It's strange to see it when it's going up. It really is, without it being slammed. So again, you know, I'm not being pessimistic. It's just that I'm not used to seeing the price allowed to move to the upside. And yesterday, as you can see, we actually saw a great move to the upside yesterday, and long may it continue. I don't have a problem with being wrong. in seeing it move to the upside. Like I say, I'm just not used to seeing it being moved to the upside. But then why should I be surprised, really, given the underlying inflation? And as it said in the headline, that the US dollar is basically trash, the amount that's been printed, then anybody with half a brain cell is starting to look at alternatives. And the alternative has always been precious metals as a hedge against inflation. As Catherine Austin Fitts says, buy silver to bribe the border guards and gold to hedge against inflation and to protect yourself against rising prices. And speaking of gold, this too also moving to the upside, which we can see here. Let's just compress this a bit and have a look, see where we are as far as other highs are concerned. We've got this high to the left down to the low. So let's just draw in some fibs on this one as well. So 1835 and the 200 MA is required to get through in order to move higher. So we'll see. But it looks like we could have a bit of a break and rest, but never say never. I wouldn't say it does go. As I've said, it'll be vertical. It'll look like the Bitcoin chart. But it's going to take the banks to shift from their short positions, which they've had for decades, to move to the long side. And when they do, there'll be nothing to stop it, because it's only the manipulation of the banks over the last, couple of decades that stopped the market having a fair value. So, bring it on. I don't mind. But it's just, like I say, I'm not used to seeing the price being moved up without it being slammed, because that's always been the case for the metals. I'm sure I'll get used to it as the profits roll in, but at the moment it's just strange to see. Okay, that will do it for this one. There won't be a market alert on Monday. I'm actually going to escape for the weekend while we can, before we get the autumn lockup again. So I will be missing in action until Tuesday morning. So enjoy the weekend. And let's see what today brings. And as ever, thanks for watching. See you in the next one.